I'm very glad that we have someone who is a pioneer in terms of thinking in this field and also in terms of execution in this field, which is Nandan, the former head of the Unique Identification Authority of India. And so Nandan is going to start proceedings by giving his vision of how things are developing in this space. I'm told he has a demo which will actually show you how this whole thing is going to happen. So without much further ado, Nandan.
Thank you, Sukumar, and it's great to be here at this Mint event on how we're going to go digital. I'm going to walk you through a presentation which is going to basically argue that we are at a very seminal point in this whole transition, and we'll also do a demo of a biometric phone or biometric tablet, which shows that the future is already here. We have the slides ready. Yeah, so I call this presentation as, are we at a WhatsApp moment in Indian finance? And I think I'll tell you what I mean by a WhatsApp moment. If you go back to 2009, there was a major transitioning happening in the world. Voice was becoming data, feature phones were being replaced by smartphones, desktop was moving to the mobile internet, and vast services by telecom companies was moving to over-the-top applications. At that time, for the telecom industry, SMS was a revenue earner, MMS was launched but not really adopted. Similarly, on the internet, that means, so this is the, companies like Vodafone or AT&T and so on. Similarly, the internet companies were also focused on their own identity platform. So Facebook had Facebook Connect, Google had their Google ID, and it was very desktop oriented. And out of nowhere came WhatsApp, which used the phone number as identity. The important thing to remember, in WhatsApp, the phone number is your identity, and your contacts became the virality factor. And they used messaging to get into this whole space. And because it was OTT, internet had come, they didn't have to depend on the telecom operator, they could just deliver an OTT app over the phone. What happened was that today, the volume of transactions, volume of messages in WhatsApp is 30 billion messages a day, and the entire telecom industry put together is at 20 billion. In other words, WhatsApp is 50% higher than all the SMSs on the planet delivered by Vodafone, Airtel, Aircel, you name it, AT&T, Verizon, and this was done by a team of 40 people. So the complete messaging market was disrupted by one startup started by a Ukrainian immigrant who grew up in the US. So this is the power of what disruption is, and how the disruption often comes not from the large incumbents, but comes from somebody that you never thought about, somebody working out of a garage. And this is a great example of that in messaging. And today, after having conquered the messaging market, they are now offering voice. If you look at the whole net neutrality debate in India, the debate is because the telcos are worried now that with voice on WhatsApp, their basic voice business is going to be completely impacted. So it's like the camel in the tent. You use messaging to get in, and then you expand to voice. So voice over WhatsApp, and now we have other competitors coming. In China we have people like WeChat. In India we have Hike. So you're going to see more and more of these communication tools also offering voice, and that's the fundamental battle on net neutrality which is going on right now. Now we have talked about the rise of the smartphone. India has gone from 40 million smartphones to 150 million smartphones in 18 months. And now you're getting smartphones as low as 2,000 and 3,000 rupees. And the current rate of expansion of smartphones is about 20 million a quarter. We're talking about 400-500 smartphones in the next 2 to 3 years. So smartphones are going to become ubiquitous and grow much faster than we thought. And Indian e-commerce is already highly mobilized. If you look at all the countries in the world, India has 41% of its e-commerce transactions coming from a mobile phone. So in some sense, we have sort of skipped the desktop business and gone straight to mobiles as a way to sell. And as you know, Myntra has discontinued the desktop. In the recent Diwali sale, Amazon, Flipkart offered a lot of things only through the mobile app. And so the whole movement is going towards the smartphone as the platform for e-commerce. And if you look at the numbers across the world, the highest proportion of transactions from e-commerce is really Flipkart and other Indian plays, much more than the foreign guys, Snapdeal and Flipkart. Now, what is happening in all this is the move towards cashless. The move towards cashless, remember that only 5% of personal expenditure today in India is electronic. 95% is cash. But the move towards cashless has started in multiple ways. It's important to understand that you have to look at the big picture. First is, in Q1 of 2015, electronic clearing for the first time is equal to paper clearing. In other words, electronic clearing like NACH and IMPS, etc., has already caught up with paper clearing. This is a transition point when you flip happens. And over time, you'll find that the electronic clearing will grow and the paper clearing will come down. You can see the trend. This is just in about a few quarters. So dramatic shift towards electronic clearing at the back end. Second is that IMPS, which is immediate payment system, a product launched by NPCI in 2011, within 3 years surpassed money orders in the country. In 3 years. Money orders was introduced in 1880. So a technology introduced in 2011, in 3 years overtook in value the whole money order industry. This is what happens with technology. It suddenly comes from nowhere and takes over. And IMPS is a fabulous product launched by NPCI, which I believe is a crown jewel in India's payment infrastructure, which built this product about 4 years back. So IMPS has already overtaken in value dramatically money orders. IMPS is about to overtake card sales. In other words, the financial transactions using IMPS, which is using mobiles and all that, is already on the verge of overtaking debit card and credit card sales. This is again within 4 years of launching. So this again shows how quickly things are changing. Yeah, and if you look at the figure on e-commerce is expected to grow 4 times in the next 4 years. So e-commerce expects to grow to about $60 billion. And today about 50-60% of e-commerce is cash on delivery. And so if you have a 4-time increase in e-commerce and if you reduce the cash on delivery, then we're talking about 8 to 10 times increase in digital payments just in e-commerce alone in the next 4 years. And then if you look at what's happening on recharge, the recharge market in India is actually the biggest digital market anywhere. We do about 3 billion recharges a month. People going into shops and giving 10 rupees and buying a data pack or loading their voice. And only 3% of these recharges are paid digitally. People use things like Paytm and FreeCharge to pay, but that's a very small fraction of the volume. So the next few years is going to see a dramatic increase in electronic recharge. That also will contribute to digital payments. And then the whole DBT has gone digital, and the world's largest cash transfer program, LPG, today is reaching 3 million transfers a day to 120 million families. That is 1 billion transactions a year is being done by the government into people's bank accounts using Aadhar. And if all the other benefits are transferred, like kerosene, fertilizer, electricity, water, we're talking about 3 to 4 lakh crore rupees, leading to 4 billion transactions a year into people's bank account. So digitization is beginning from the government side also. This is obviously more and more people are opening bank accounts to get their benefits, and that means money is coming digital in the first place into your bank account. So the point I'm trying to make is that the change to cashless is happening everywhere. It's happening with government payments, happening with recharges, happening with card payments, it's happening with IMPS, it's happening with all the stuff out there. Now the smart shift is happening because Aadhar is now at 930 million people have an Aadhar, and that will reach 1 billion by March 2016. And that provides online authentication and eKYC. So I can authenticate a person online with Aadhar, and I can open a bank account electronically with Aadhar using the KYC. So what's happening is the fundamental nature of authentication is going to change. Historically, we need something called two-factor authentication. Reserve Bank believes that we need to have two-factor authentication to make sure there's less fraud. And the two factors historically were what you have, which was a card, and what you know, which was a PIN. So when you go and use your debit card, they bring some gizmo to you and you enter your 4-digit PIN. So it was two-factor authentication, card and PIN. Now what's happening is that the phone is ubiquitous in everybody's pocket or purse, and therefore what you have is moving from the card to the phone. So you don't have to issue a card. Card issuing is a painful thing. You have to send a card and so on. And however, because of Aadhar in India, I can now do biometric identification as to who you are. So Aadhar authentication can now provide the second factor of authentication. So the future of authentication is what you have, which is the phone in your pocket, and what you are, which is your biometric Aadhar. So if people have a 500 million smartphones and 1 billion Aadhars, every one of them can do single-click two-factor authentication. Today in the West, this is offered on your iPhone. If you have an iPhone, if you look at Apple Pay provides single-click two-factor authentication. But we are combining this with Aadhar and smartphone. So this is an open platform. A startup in a garage can offer Apple Pay kind of features. That's the important thing. You don't have to rely on some large company. And this biometric smartphones are there. And I'll invite, now for example, there is a Samsung phone which is coming out, we will give you a demo, which is coming out in the next couple of months, which has the iris scanner built in. And the iris scanner, by the way, just costs less than $5. So it's not really going to add to the cost of the phone. And many other vendors are looking at it. Samsung has already launched it. So now I'll request my colleagues, Dr. Pramod Verma, who was the chief architect of Aadhar, and he's a technology advisor to Aadhar, and Mr. Sanjay Jain, who was the chief product manager. These are among the best guys in India on technology. They're in Delhi, fortunately, so I brought them here. And they'll give you a demo of how this single-click two-factor authentication works. Guys?
Thanks. Thank you. So I have Pramod here, and I'm going to capture his iris and then perform an eKYC. And this is a sample application that's built only to do this. This would be a part of banking applications, etc.
So I'm the customer. I'm trying to open the bank account. So this could be a Flipkart delivery boy, literally.
Or it could be
bringing a bank.
Exactly.
Yeah, bank application to me.
Okay. So I'm entering his Aadhar number. He's given that to me. It's 3150. And since we do the demos often, we actually happen to have it there. And I'm going to authenticate. And on this side, if you notice, there's the iris sensor and an IR light that will illuminate it. And so, Pramod. And it auto-captured. There's liveness detection built in, so you couldn't take an image.
This is live from production.
And
Live, instant.
So what you saw was,
This brought out a digitally signed Aadhar card. That's what really happened to the bank. So the bank has a digitally signed Aadhar card with them without having a paper and manual verification at all.
so what you saw was it one click, two-factor authentication, phone as one factor, Aadhar as another factor, electronic KYC, open a bank account.
Thank you.
Okay? This is real. This is not some science fiction. It's happening now. And this is available, will be in mass market in the next few months. And in the next 2 years, you'll have millions and millions of phones with iris scanners, which do automatic authentication and eKYC. So think about it. You know, the Flipkart or Snapdeal delivery boy can come to your house and he says, "You want a bank account?" You say, "Sure," and then you click, and the account is opened. And this is also available as self-service. So I don't need to, I can open my own bank account sitting in my house. I can just look at my own camera and open a bank account. So think about what all that means, and similarly with payments. So fundamentally, we are on the verge of a revolution where India will be the first country in the world to be able to have single-click two-factor authentication on everybody's smartphone. Now, on the bank account side, we know that Jan Dhan has opened 19 crore bank accounts, and the goal is to have everyone have a bank account. But the other important thing is that what is changing is that the only scalable way you can have payments is by using smartphones. Because the problem with cards is you need places where cards work. So you need POS machines and ATMs. And if you look at what's happened in India, we have issued 15% growth in credit cards, but only 10% growth in POS machines. We have had 54% growth in debit cards, but only 30% growth in ATMs. So fundamentally, installing POS machines and ATMs is a very painful process, which is very slow. But smartphones have grown at 275%. So automatically, with all this stuff, the smartphone will be the device in the merchant. So what's called as the acquiring network will be the smartphone, and the smartphone will be the device in the consumer's hand. So it's smartphone to smartphone, and both are growing at the rate of 275%. So fundamentally, you're going to leapfrog. We don't need to go into cards. We can just leapfrog this damn thing and go to phones. So phones will become the basis both for the device in the hands of the consumer, replacing the card, and the device in the hands of the merchant, replacing the POS machine. And the next thing which is happening is that NPCI, which I mentioned earlier is a part of our great infrastructure, is rolling out something called the Unified Payment Interface. This is getting rolled out in the next 2 months. By December, January, we'll have apps out there with UPI. It's already being tested by many banks. And this will allow peer-to-peer payments. Today, what happens with payments is that payments are typically person-to-merchant payments, right? So when you get your Paytm wallet, you use it to make Paytm transactions. You do e-commerce on a Paytm website, or you use Paytm inside your Uber app to pay for your taxi and so on. So these are all person-to-merchant payments. So similarly, if you use MobiKwik or something, you use it from P to M. You don't use them for P2P. The reason you can't use them for P2P is that each of these payment networks is an island. So I have an HDFC Chiller bank account, you have a Paytm, somebody else has MobiKwik, somebody else has a Buddy from SBI. These don't talk to each other because they're all private sort of closed loop or semi-closed loop networks. Think about it on mobile phones. In mobile phones, if you had a situation where the Vodafone user could not talk to the Airtel user, it would really be irritating. No? So I would ask you, okay, what phone do you have? Oh, you have Airtel, okay, I can talk to you. You have Vodafone, no, I can't talk to you. I mean, you can't operate. The reason why the mobile network is so ubiquitous is that it is interoperable. I don't ask you, I just ask you a mobile number. I don't ask you, who's your network provider, because there is interoperability among mobile operators, which is why I can speak to anybody. We need the same interoperability for mobile payments. And that interoperability is coming with this thing called Unified Payment Interface, which is getting launched. What that does is it enables P2P payments, because now when I want to transfer 500 rupees to Sukumar, I don't need to know where his account is. I just send him the money, and he may be in ICICI Bank, I may be in Axis Bank. It doesn't matter. It just happens. So peer-to-peer is now possible in payments. Now what that means is that if you look at the growth in outlets where you get cash out, bank branches are expected to grow to 150,000 by 2020, ATMs to 270,000, POS machines to 1.5 million, BCs to 3 million, retail outlets 15 million. But everybody can be an ATM now. You don't need ATMs. So if I need cash and Anil has lots of cash in his pocket, I'll go to Anil and say, Anil, give me 1,000 rupees. So I'll transfer 1,000 rupees from my account to his account, and he'll give me 1,000 rupees from his pocket. So he becomes an ATM to me. So suddenly everybody is an ATM. So fundamentally, cash in, cash out becomes universal or ubiquitous. And the reason you need to make cash in, cash out ubiquitous is that before you go to a fully digital world, people should have the confidence that they can keep their money in a digital account and withdraw it at any time. And that's what this does. So you need to have cash out to make digital happen tomorrow. So everybody becomes a BC. Everybody becomes an ATM. That's going to happen like 2 years. It's not that far. Now, what has happened also is that in the last few years, we have built on top of the Aadhar layer, we have built a number of APIs or open application programming interfaces. So Aadhar authentication is an example. So for example, today, some 300,000 government employees do biometric authentication when they go to work. That's an example of authentication. Or the opening of the bank account with KYC is using the Aadhar eKYC. That's the second layer. The third layer is something that was launched as part of Digital India, which was eSign. eSign is a way to use Aadhar to electronically, digitally sign a document. So suppose you're applying for a loan, you fill in all the loan details, you want to send that loan document to the lender, you can just sign it electronically with Aadhar. So that means I can have a paperless transaction of any kind just by signing with Aadhar, and that's non-repudiable, which means that it is robust, secure, encrypted, all that. So it's much stronger than paper-based systems. So e-sign is something which was launched about 6 months back, and it is now being rolled out by many providers because it's like an ecosystem of providers who will offer e-sign. The other thing which will be offered is digital lockers, which allow me to keep these documents safely somewhere. So think of it as your Dropbox or Google Drive, but with security and personalization. So I can keep all my documents electronically encrypted in a locker, and I can invoke it and give it to somebody else. For example, you can also use it for degree certificates. So, we have all this fake degree and all, we don't know who has a real degree in India nowadays. So a lot of controversy every few days in the media. So imagine a model where the college where you go to signs all your degree certificates and transcripts and electronically puts them into a locker and sends you the address of the locker. And when you go for a job interview, you just give the address of the locker and authorize the locker to release your degree certificates to the employer. The whole thing becomes paperless, trusted, real-time, all that stuff. So fundamentally, lockers will allow us to create a completely paperless way of exchanging documents. Could be loan documents, could be degree certificates, anything where paper is involved. And then we have an architecture which allows you to give electronic consent. The thing is that if I have to approve something, I have to give consent. And Aadhar authentication is a way to give electronic consent. I'll come back to what are the implications of that in a while. And then I talked about the unified payment interface, which allows you to do mobile any-to-any payments. And then you have the GST and the Goods and Service Tax Network, which is a company that has been set up to operate the Goods and Service Tax Network. And that is going to be a fully electronic system. And that has an implication also. I'll come back to that point. So these are what we call as the India stack. These are all things built in India. This is the only country in the planet that has all these features, by the way. And this allows you to develop completely paperless transactions, completely cashless transactions, completely presence-less transactions. Because the big cost in India today is in-person verification. You have to go and stand in front of some guy and say, I am who I am. We remove all that. We just do it on your phone. So you dramatically reduce cost by removing in-person verification and do electronic self-service verification on your phone. So this stack is a very important stack which is going to lead to an explosion in innovation in the coming years. So these are the stacks. There's the presences layer is using Aadhar authentication. The paperless layer is using Aadhar, eKYC, eSign, and Locker. The cashless layer is using all the payment tools. And the consent layer is by creating a regulatory system for open data sharing. And the whole thing is based on bank account, Aadhar, mobile, and it leads to many, many applications like credit, commerce, and so on. Make sense? Make sense? Okay. And electronic consent is basically how do we, and there's this big argument about privacy as if Aadhar is going to take it. Aadhar actually is the best thing for privacy because with Aadhar authentication now, I am empowered to decide who uses my data. Because only when I give my consent, only then my data is shared from my locker to the other guy. So when I go for a job interview, I authorize my locker to release my degree certificate to the job guy, and so on. And so this is saying owner can choose to share the data for a purpose using electronic consent. So this whole consent architecture is coming out. We'll be the only country in the world to have electronic consent architecture, which is very, very important. Now, why this is important is that in the next 5 years, India will go from being data poor to data rich because of electronification, right? So, for example, social media is a big, you have, people are on Facebook and Twitter and, all that stuff, LinkedIn. E-commerce, as I said, will go to $60 billion transactions. Then you will have payments. What payments going electronic does is now you will have a digital trail of your payment activity. So as a consumer, when I make digital payments, you will have the trail of that. As a business, when I make digital payments, you have a trail of that, right? And everything becomes paperless, electronic, and you have digital identity. GST will make tax payments electronic. So everything becomes electronic. So suddenly you will go from no data to data on 1 billion people and 50 million enterprises in 5 years. And that, combined with machine learning and algorithms, is going to change the way you deliver services. So this is how we're going to change all these services. So just to go back, an example of that is how we'll use that for credit. I'll come back to that. What happens because of electronification is the market size will explode. Because the biggest problem in markets today is the cost of onboarding people into a system and the cost of transactions. I think Monica knows all about this. So we are looking at this for SEBI. The onboarding cost into the mutual fund industry today is approximately about 1,500 rupees to onboard a person. I mean, ballpark, people give us different numbers. If I am a guy selling, I'm a distributor for mutual funds, my break even on this is only if that household can invest 3 lakh rupees. Unless he invests 3 lakh rupees, I don't make my return on my onboarding cost. And only 3 million households are in that zone. That's why if you look at the capital market, fund market is stagnating. It's not growing. The same old 10 million guys who keep buying stuff and all that. Now, if you're able to reduce the onboarding cost from 1,500 rupees to 100 rupees, suddenly 20,000 rupees is enough to be a break-even investment. And the number of households who can do that balloons from 3 million to 34 million. And if you're able to reduce the onboarding cost to 10 rupees, then 2,000 rupees investment is sufficient. And suddenly 105 million households can participate in the capital markets. That's the power of reducing onboarding cost to exploding the market, right? This is very important to understand. In India, there have been 3 examples of this. One, how the mobile phone company expanded with prepaid and all that. So they really lowered the cost of acquisition because KYC, of course, we don't know what KYC they did, but anyway, a lot of people got phones. And second, you could do a recharge with 10 rupees. So suddenly you had 900 million phones. Another example of that is the COD. The big growth which happened in e-commerce was the invention of COD because there's no credit card, debit card. So you do cash on delivery. So 60% of e-commerce is cash on delivery. Even Uber had to concede and you have cash on delivery on Uber taxis. So that's the admission of the situation. So these are all, or the whole informal economy is based on that. But is there a way to bring to the formal economy the efficiency and security, bring to the informal economy the efficiency and security of the formal economy? That's what we're doing with all this. So we can bring 1 billion people into the system, 1 billion people can transact because we're going to dramatically reduce costs. So volumes will go up whenever you reduce cost. So what happens to banking? In the old days, this is how you opened a bank account. You went and filled out some Hajar forms and all that. You gave some all kinds of Xerox of your documents. Now, all bank account opening is paperless. That is a lie. That is Federal Bank's account opening. It's already there. This is not science fiction. They're already opening that. And if you look at all the new banks, IDFC Bank launched last month. They're all doing this paperless bank account opening. Now, you can actually, in the next 1 year, you'll be able to open your account yourself. So you can open your own account on your own phone. You don't have to go anywhere because the in-person verification is done biometrically. Or, as I said, a Flipkart or Snapdeal delivery boy can come to your house and you can open an account, right? Because everything is in the system. So the guy who's coming is just bringing his device with you. Imagine the expansion of that. And instant SIM, instant investment account, instant insurance policies, so the whole financial system can become like this. Anybody can, so the Kirana store can sell an insurance policy, stuff like that. And we think that this can also lead to explosion of credit. So we have a lady here who's a vegetable, makes food in the morning and sells. Now we think that her entire thing can be done on a phone. She needs a loan. She agrees to share data. She sees different loan offers in the marketplace, accepts the best offer, receives the loan, gets paid digitally, repays the loan, and this cycle. This cycle on a phone. okay? And for that, the infrastructure we need a marketplace for getting a loan, we need data sharing norms, we need a paperless contract using e-sign, we need transaction processing, we need a payment app, and so on, right? And everything is part of what we have built. So if you look at the last circle, that is the infrastructure we have built. So using the infrastructure that has been built, which is Aadhar, KYC, locker, Yevo, all that, imagine that some person who's starting her stall in the morning can get an electronic loan for 500 rupees instead of having to pay exorbitant interest somewhere. This is doable now. So if you look at what a bank does, bank has paper signatures, documentation, loans, decision enabling, cash, ATM, identity. It's all on your phone. I can use e-sign to sign, locker to keep the document, Aadhar KYC to open the account. I can use mobile payments, and I can use algorithms to give you a loan. Because when you have all this data-rich situation and with the customer's consent, his loan can be decided on the basis of his transaction history. And so if I have a record of payments, then I can go to a lender and say, look, I've been such a prompt payer, now give me a loan. So I don't need some credit officer and all this stuff. Algorithms will tell us whether he's a good credit risk. So we'll be able to give loans to millions of people at scale using rich data and machine algorithms. So all this is happening, right? And in the meantime, the market is changing. So now we have 21 new banks, right? 11 payment banks, 10 small banks, and of course we have the two big banks, IDFC and Bandhan. Now these guys are going to bring in new technology, new business models, and new capital to the game. This is a very huge disruption that is going to happen there. If you look at the history of banking, in 1969, Mrs. Gandhi nationalized 14 banks. In 1980, she nationalized 6 more banks. So 20 banks got nationalized. From 1969 to 1993, no new banks were allowed in this country. As part of economic liberalization, the government allowed 10 banks in 1993. That's how ICICI Bank, HDFC Bank, and all that came. Then in 2001, they allowed 2 more, Yes Bank and Kotak. Then in 2014, they allowed 2 more, IDFC and Bandhan. And 2 months back, they allowed 21 more. More banks have been given licenses in the last 3 months than the last 40 years. This is a revolution waiting to happen. And these guys are coming with huge truckloads of capital. You have Reliance, you have Airtel, you have Vodafone, you have Idea, you have all big guys. Then you have the startups, Paytm, our friend Vijay, who's coming, I think, in the afternoon. And these new guys have got big backers. There's some guy called Jack Ma who sits in China and writes checks for $1 billion. There's another guy called Masayoshi Son who's in SoftBank. He writes checks for billions of dollars. So suddenly you have fresh capital with huge signing power coming into India to fund all this stuff. Can you imagine what's going to happen? So we're going to find a new class of investors who are going to fund things without worrying about profit. So if you're a public bank, and I run a public company, and I know what this game is all about. Every quarter you go and some analysts come and say why your profit has declined by 0.1% or some funny question like that. These guys nobody even knows whether they don't make money, but it doesn't matter because this is a different game. This game is leading to what is called as the unicorns. The unicorn is a term used to describe a company with $1 billion valuation. And today Uber is $51 billion, Snapchat $16 billion. In India we have all these guys in India like Flipkart and all. We don't know who makes money in this. We're all private companies. A lot of them lose quite a bit of money, but they're worth a lot of money. So fundamentally, in the private markets, it's not like the public market of profit and so on. It's based on the philosophy called winner takes all markets. And the philosophy here is that you keep outspending your competitors till you're the last man standing. And once you are the last man standing and you have market monopoly, then you raise your prices and then you make profits. That's the theory anyway. So all these guys are writing these checks because they're saying, we will keep, he who blinks first loses in this game, right? So the guy who doesn't blink, he remains standing and then he makes money. And this is called as a winner takes all market because that's, and it's already happening. For example, in the US, the largest taxi company or mobility company is Uber, which is worth about 50. Today I was told they're worth 60. I don't know what's happening. But anyway, $50 billion. The second one is only 5 billion. It's not like, if you look at the old days when there was Coke and Pepsi or Visa and MasterCard, they both had similar market shares. In this new world, the number one guy has 95% market share, the number two guy has 5% market share. So this is called as a winner takes all market. And in this market, therefore, you keep putting money and blowing up billions of dollars because if you don't blink and the other guys blink, then you'll be the last man standing and you'll get value. And the reason this can happen is because, partly because interest rates are zero or something, so a lot of people have a lot of money to do all this hedge fund stuff, but also because China created billions of dollars of value. So Alibaba, even after the crash, is worth 50, 60 billion. So Jack Ma has a lot of money to spend, and so does Mr. Sohn. All these guys, and they're saying India is the next big market, so let's put money here. So all this money is coming. So you have Yuri Milner of DSU who made his money on Facebook. You have Naspers from South Africa, which made its money on Taobao or Tencent or something. So all these guys are coming. So all this money is going to come, and all these banks are getting licenses. So think about what's happening. So we think that banking is going to be completely disrupted because all payments now will happen through the mobile. All lending will happen through data and algorithms. So I don't need credit officers and say, how much loan do you want and all, none of that stuff. And once these guys become the face of the customer, they will also become the route for the CASA deposits. Is this getting too boring? Okay. CASA deposits. So suddenly, the guy who controls the customer through the mobile app becomes the face of the customer. He gets all the deposits. Now, who is going to win this game, right? You're going to have telecom operators coming in, vast distribution, relationships, and the great ability to do low value, high volume, low cost transactions. The great achievement of our mobile industry was they could have a recharge for 5 rupees and still make profit. That's the greatness of the so-called minute factories that they've created, right? And then you have the wallet guys. You have all these guys, MobiKwik, Paytm, Freecharge, all of these guys, the wallets, which have learned how to give a high-tech low. They also know how to do high volume, right? So they're getting, Vijay has a license. Today, Paytm is doing more transactions than any bank in India, already. And Paytm started operations, I don't know, 3, 4 years back. It's a different matter that the transaction value is low, and I don't know whether they can make any money on all this stuff, but they do more transactions than all the banks in India, already. Now, what is the advantage the incumbent banks have? They clearly have a head start. They have a large base. They're trusted. They own the customer. They offer a multi-channel experience. And they have access to the same technology. There's nothing to prevent an existing bank to use this technology. And now, as Sukumar said, we know it's coming, so you can't say we didn't tell you. All now you know this stuff is going to happen. So, who is going to win, we don't know. And you say, oh, these things, oh, you guys always give these high funda lectures. We don't know when it's going to happen and all that. A lot can happen in 5 years. In 5 years, Skype became the world's largest provider of cross-border telecom conversations. In 5 years, Facebook went from 100 million to 1.2 billion users. In 5 years, Aadhar went from 0 to 1 billion users. Sarkari program, 0 to billion users. Smartphone volume in the world went from 172 million to 1.24 billion in 5 years. Airbnb went from nothing to the world's largest hotel chain in 5 years. Then you say, oh, you're giving only technology example and all that. Uber drivers went from 0 to 150 in 2.5 years in the US. US oil production, this is not IT stuff, went from 5.5 billion to 9.6 million barrels in 5 years. US went from being one of the world's largest importers of oil to the world's, they'll become an exporter shortly because of the innovation in fracking and horizontal drilling and all this stuff. All innovation, not done by large companies, but done by startups. So this is physical stuff. This is not data and all. This is all actually digging in the ground. They doubled the production in 5 years. Newspaper revenue fell. I hate to tell this at a Mint conference, but you can see the newspaper revenue was at about $65 billion in 2000. It's now down to $20 billion by 2010. Look at that. This is a serious graph. All of you should watch. I mean, you better tell your guys, Sukumar. See what happened to newspapers. Okay. Photographic images. At the peak of film in 1999, there were 80 billion images of photographs taken. Today, because everybody has a camera and they take your pictures, 2 trillion digital images were taken last year. So more images were taken with smartphones in last year than the history of film. Okay, this is what's happening out there. So anyway, my point is that there's a major disruption going to happen. We explained to you how WhatsApp did disruption in telecom. There's going to be a similar disruption in the financial sector in India because everything is happening at the same time. Government is innovating through PMJDY, DBT, and payment banks. Environment is changing with Aadhar and smartphone penetration. Technology is changing with one-click, two-factor authentication. I showed you an example. New market players are coming, 23 new banks, new capital, Jack Ma, Masayoshi Son, Yuri Milner, Naspers, whatever, Jaspers, and design innovations, the whole stack, Aadhar, eKYC. So all this is coming together. Technology, regulation, capital, markets, design, innovation, everything is coming together. So is this a WhatsApp movement for Indian finance? I don't know who's going to win. I'm not saying this is going to be won by the new guys or old guys, but I can assure you that everyone will benefit. Thank you very much.
So we will now have a one-on-one conversation where Mr. Sukumar and Mr. Nilekani will share their views on the industry.
I'm going to start with the obvious questions, right? Because, and then we'll also throw it open after you and I have had a chat. This looks very impressive, it's very logical, everything else. But it's clear that Aadhar is the linchpin, or it's one of the linchpins.
It's very important.
It is a very important constituent. And there is a legal challenge surrounding that, right? Which, because if that goes, then it means, I don't know what can replace that in this framework.
No, it's not going to go anywhere.
Okay. What do you think is likely to happen?
No, look at it this way. On the political front, Aadhar has survived and flourished in spite of a major political change. When I stepped down from the UIDAI as chairman in March of 2014, we kept our commitment that we'll do 600 million Aadhars. We did that, and then I stepped down. The new government has embraced Aadhar. Prime Minister Modi reviews it every month in his Pragati meetings. He tweeted about it day before yesterday. And now it's crossed 930 million. So that continues. The Supreme Court has not put any restrictions on continuing enrollment. So enrollment will continue, will hit 1 billion people, the whole country will have Aadhar in the next. So that's one part done. The second thing is that the usage is going up, and the Supreme Court had initially said it should be limited to LPG, kerosene, and food PDS kind of stuff, but then there was an appeal made. It was a unique appeal because more than a dozen people appealed. It's unusual that all the state governments appealed and the regulators appealed, and then the Supreme Court further expanded that whole thing to include pensions, EPFO, NREGA, and Jan Dhan Yojana. And if you add up the users of all the programs that they have sort of allowed from a government scheme point of view, it's about 400 million families. So everybody, you will either have a LPG or you'll have some EPFO account or you'll have something. So you're going to be in the system. So everybody will have this. Also, the private use of Aadhar is nothing to do with this. If I use my Aadhar in a private transaction, there's nothing to do with the courts. So that private usage will go up. So I think apart from maybe some restrictions on the government schemes, using it to send money, everything else is pretty much doable today. And the argument which has gone to the Supreme Court Constitutional Bench is a larger issue. The question is, does India have a fundamental right to privacy? This is like a mega question. I can't answer that mega question, right? I mean, because if you're talking at that level, then it's about phone tapping, it's about surveillance, it's a lot more than Aadhaar is just a small part. And to be honest, I believe that Aadhaar this is just a campaign that people have done. Aadhaar is far more secure for privacy than anything else. Today, let's face it, what phone you use?
iPhone.
iPhone. You use the touch, right? You use that iTouch.
Yeah.
So every time you use your iPhone, data about you is being sent to Cupertino. So somebody in Cupertino knows exactly what you're doing. Somebody in Cupertino has your biometrics, right? When you do a Google search, Google knows exactly what you're searching for. When you post your last night's party, Diwali party on Facebook, maybe you had a couple of drinks too many, you put a picture. What happens? So, I think this notion, we are happily giving away our data to, companies in Cupertino or Mountain View or Menlo Park or wherever it is. And you go abroad, all our great activists go abroad on junkets, conferences and all that. They happily give their biometrics. You go to London, you give biometrics. You land in Dubai, you give biometrics. You land in New York, you give biometrics. But if you want to have a program where billion Indians can improve life, privacy is gone and all that. So I think this whole argument is a massive case of hypocrisy, which is already exposed. So I'm not worried. Aadhaar is here to stay.
Let's move to this private usage that you mentioned. I remember this was soon after, the Aadhaar program was launched, and we were having a conversation, and you said, don't see it as a number, see it as an app. Right?
As a platform for apps.
Yeah, because anyone can use this to do pretty much anything. Do you see some of the new electronic wallets and payments guys and all beginning to use this?
They will start with this. If you look at IDFC Bank, which is a new bank, they launched, actually the Prime Minister launched the bank on October 4th or something, recently, November 4th, whatever. And they did a live demo to the Prime Minister where they brought in their customers from Hoshangabad district of Madhya Pradesh. And they withdrew money from a micro ATM using another authentication. That was the device was made by a private company, the user was a private bank, and that's it.
That data verification backend was Aadhaar.
Absolutely. Right. In real time. They showed it in the Prime Minister's, that Panchavati, that office of his home office. So, and today there are many startups coming that will use Aadhaar. There are many funds coming that will fund these startups. So many people are talking about creating Aadhaar specific funds. So you'll basically have an innovation ecosystem around Aadhaar, just like you have an innovation ecosystem around internet or GPS. So just like internet and GPS where government created infrastructure which ultimately led to the Googles and Facebooks of the world, and GPS led to the Ubers of the world, Aadhaar will also lead to a huge number of startups in the next 10 years, and many of them will become very large.
When you had that slide which showed the India stack, right? Obviously, not all of this has been orchestrated, right? NPCI came into being.
No.
Right?
What happened?
So in some ways, it's providential, isn't it?
Yeah. So to give you this, I think that's a great point. The partnership between UIDA and NPCI was one of the great success stories of collaboration in India, because what happened was when I took charge in July 2009 in NPCI, I got a call from Mr. M.V. Nair saying, we have created a company called NPCI. I said, hey, kya hai NPCI and all that. He said that the RBI and all didn't want, RBI was actually running the payments of India. So they said RBI should not be in the payment business, they should be a regulator. So they spun it off and created NPCI as a non-profit Section 25 company owned by banks, which became, so that company was created coincidentally the same time as Aadhaar independently. And then I had a call from the Deputy Governor of RBI, Mrs. Usha Thorat, saying that now that ID is coming, we need to use it in banking. That's how it all began. So over the last 7 years, there's been a fabulous partnership between the UID system and NPCI. And NPCI has built all this infrastructure. So you're right. But the building was done by us together. Sure. So the creation of NPCI was a priority.
And when it was created, I don't think anyone had any idea that it would go down.
That was to manage the ATM network.
That was the clearing house, right?
No, ATM network, retail transactions. Okay. ATM networks. And the ACH also. Yeah.
What do you see as the big challenges to this?
Well, I think on the Aadhaar front, obviously, more clarity on this Supreme Court thing.
Yeah.
Ideally, the government should pass a law. That, we framed a law and it's been in Rajya Sabha now for many years. It will be great if this government says, let's close that and pass the law. So that's on the Aadhar front. On the regulatory front, I think the RBI has done an amazing. I think RBI's regulatory innovation is a brilliant case study on payments. I'm not talking about other stuff, but on payments, because they started by first allowing PPIs, prepaid payment instrument licenses, and I think many guys here probably saw somebody who has. So they gave it to everybody, and you had a large number of people who came in, and that originally they began as like BC kind of thing, but then they became these online wallets, and that's what led to the Paytms of the world and so on. So I think they created innovation in payments by saying, let's bring in new people into the game who are not the traditional guys, and that's how the prepaid instruments happened and the BCs happened. And then they legitimized that even further by giving them bank licenses. So this is a brilliant case of calibrated innovation and competition in the payment sector.
What does this mean for banks? What does it mean for banks? Because
it's up to them.
I mean, a significant retail portion of their business is undergoing major churn, is seeing a lot of new players coming in. I think from the customer point of view, interacting with these new players or using them will probably be a lot easier than doing the banks.
Seamless.
Yeah, it is entirely seamless. So what happens to the banks?
It's a very good question.
You're not going to answer.
Who am I to say what will happen? I think I'm saying this technology is open to everyone. Whatever I described is public information. Whatever I've described is public utilities. It's not owned by any company. It's not owned by. See, what has happened in the West is that after building internet and GPS, what happened was after 9/11, the focus of the government went towards this terrorism and surveillance and all that. And they ceded a lot of this to the private markets. So today in the West, this entire stack is owned, doesn't exist fully, but even if it exists, owned by private companies. So it's owned by the Googles and other Facebooks of the world. We are the only country where we have a public stack, which is built for any usage. So this stack can be used by a startup to create the next generation bank, or it can be used by a large existing bank. Then it's a question of how, so it's a level playing field, it's a public good, both have access to. Both have access to technology and capital. Both have access to the brain power. Both have been told this is going to happen. So it's not as if they didn't know it was going to happen. Now it's up to them, no? I'm not sitting here saying who's going to win this game. Frankly, for me it doesn't matter who wins the game, but the game is changing forever, and it's going to change in 5 years, and there's going to be some dramatic changes which I described, and I explained to you why it will happen. It's not some airy-fairy stuff. It's based on hard data. And it's up to the banks to say, I'll use this technology and push back on the new competition.
From the regulatory point of view, there is also the obvious use of the stack or components of it to monitor transactions, to make your tax information network better. There is, right?
No, I think that will be as per the laws for that. I mean, for example, already there are laws that require you to report high value transactions to the regulator. So that's a different thing. But obviously digitization is going to, with the appropriate legal structure will enhance the ability to reduce black money and so on. But I think the argument is that we have to make it attractive for people to be inside the digital economy. In other words, if I have a record of my payments digitally, and if that helps me to get a better loan, or get a loan at all, that's worth it for me. So the whole idea of the credit thing I showed you is that instead of going to a chit fund or going to some money lender, if I can get a loan at the same efficiency and cost, much lower cost and in real time on my phone, then that's a good enough reason for me to be in the payment system, to have digital. So we have to make it attractive for people to be in the system, which is what credit will do. So credit is a killer app of digitization.
That's true. What is also happening, of course, is with a lot of the wallets, and it will also happen with the payment banks, is a lot of the VC money is also going to incentivize the customers.
That's what I said,
Right?
no?
Yeah.
These guys are going to write checks.
Yeah.
What is the philosophy? Winner takes all, last man standing. I'll not blink, let him blink first.
So
Already
you-
seeing it already.
So
yeah.
you get money back for paying your electricity bill through a wallet.
Next few years, you can just live on these cashbacks.
Okay, I'm going to throw it open for questions. We have 15 minutes of question time. Raise your hand, introduce yourself, ask your question. There are people with mics. You have a question? No, he has the mic. Yes, please, gentleman there.
Thank you. I'm Divakar from Indicus. Thanks, Nandan, for that very wonderful presentation. One question, because we started out with what will happen to banks, right? That's what Sukumar said.
No, I didn't say, he said.
Yeah, that's what he said. So the very fact that payment banks, by virtue of the differentiated license, have not been allowed for credit, and yet one of the most important data-based advantages of all this innovation is that more and more transaction information will be available. The business model for the payment bank presently cannot be based on credit. So you have, therefore, the small banks and the conventional banks which will be taking most of that credit piece. So isn't it an implicit expectation that payment banks and the other banks will have to work together for a lot of information sharing on customers?
Yeah, but see, first of all, I think payments banks can be profitable if they use technology, because payment banks will get deposits, CASA deposits at whatever, 3-4%. And I know that the bulk of that will be impounded in government at 7-8%, but that, frankly, that margin is good enough. And if you look at many of the banks today, they may make a loss on lending. If you take all their NPAs and all that, maybe it's a good thing they're not lending. They'll probably make more profits. So it can be a profitable business if it's done well. But remember that because of technology, there is nothing to prevent a payment bank from being a loan aggregator pass-through, right? So I'm a payment bank. I've captured 100 million customers. The customers ask for a loan. They go on the phone to a marketplace where there are 5 lenders who are banks or NBFCs or whatever, and you choose which of the lender, and the payment banks takes a cut. So the loan does not have to be on the book of the payment bank. So the payment bank can offer every banking service without being a universal bank. In fact, it's better for them because they don't get into lending at all, and they make a cut on every loan. And because they have the digital exhaust of payment details, they are able to help in the bank's underwriting. So if I was a payment bank, I would then tell the bank behind, the lender bank, that look, my data and my machine learning algorithm is saying this guy is a 99% chance of recovery or return. So that becomes a factor in the rate at which the bank offers. I mean, with a payment bank, I can build a bank, don't worry, a full bank, in today's regulation.
We'll go to Saket first, and then we'll come there. And then,
Hi.
yeah.
Good morning, sir. Thank you for the wonderful presentation. I have a little question. When you talk about the transformation to digital and you talk about an economy, 400 million people are below the poverty line. If you talk another 50% of the population of the 800 million are still uneducated about what really digital is all about. When you talk about an economy, you're shifting all of them. The intent is to shift all of them to digital in some way or the other. Don't you think that really opens up, forget the top 100 million who are educated in the country, but that 1.1 million people as potential, I mean, we are not educating them on how do you use the bank or a digital or a phone or a laptop, and still if they have a bank account, that's relatively much easier to penetrate for a hacker. I come with a startup of security, that's why this question. So,
Anywhere to promote your product. Huh? Well, no, obviously, I don't want to get into the architecture of this whole thing, but it's far more secure than anything else. It's encryption, signage. The whole thing is very well designed to give security at scale for small transactions. And we can have a separate discussion on the architecture, not here. But I think we underestimate the ability of our people to adopt to technology. And we have seen that with mobile phones, 900 million mobile phones, and people, look, I mean, you're doing 3 billion recharges a month. Every one of them in some sense is a digital transaction, because I go to a shop, I give 100 rupees, and I get money, minutes downloaded, sort of recharge in my phone. That's a digital transaction. I've taken physical cash and got digital cash. Okay, it's a single purpose cash for voice calls or data, but people have understood the concept of electronic value. That's already done. Look at the way WhatsApp is being used. I mean, WhatsApp is being used, the biggest product for e-commerce. I mean, the other day I'd gone to somebody and said, shall I have WhatsApp? I said, boss, I don't have WhatsApp. I don't have WhatsApp. This guy has got WhatsApp. He wants to send me a picture of something that he wants me to buy. So this game has changed. These people, everybody will get it. They'll adapt it at scale. But since we are here, one of the other things which I'm working on is literacy and numeracy. So that's actually to solve the other issues, how to make people literate and numerate to use this stuff. But that's a separate thing. Nimish also mentioned that book has come out.
Yeah.
Networks.
We can't hear you.
Hello.
Yeah.
Nimit Javeri from Paladin Networks. In this 5-year journey that you mentioned, will the India stack support cryptocurrencies at some point of time?
Support what?
Cryptocurrencies.
Well, the thing is that we don't know how that is going to go, in the sense, will Bitcoin succeed? But will it be not Bitcoin but blockchain? There are a lot of people talking about improved products. Yeah, it could, but right now we're not really focusing on cryptocurrencies, because there's lots to be done without cryptocurrencies. But yeah, it's not a big deal to support blockchain if you want. Or somebody can support blockchain. We are not saying we'll do it ourselves. In the sense, whether blockchain should be a public good or not is really the question. Some private guy can always offer blockchain on top of the stack. But should blockchain be a public good, then that's a strategic question we have to think about.
Hi, my name is Manish Diwan. I'm from SBI Cards. I think someone mentioned...
Hope you didn't feel offended by me, anything I said. Huh?
No. We see synergistic opportunities.
Very good.
Okay, so my question was linked to security, but slightly different. One piece of news went unnoticed couple of days back. It basically read that Russian subs are patrolling an area of the sea where a bulk of internet cables are laid. So, cash is physically scattered all over the world into lockers, into homes and wallets and everywhere, where digital value is stored in machines and some cables, some set of cables. So is this concentration, does that create an additional element of risk that it can be physically disrupted?
Yeah, absolutely. I mean, if you were to go and cut all the cables, the transy cables that are there, your whole internet architecture will come down. So there's an argument, number one, in fact, a lot of countries are saying the data should be in country. And that's why data centers should be in country. And also you need to build in redundancy and all those kind of things. The more you rely on this, the more risky it is, I agree with you. Maybe you can use this software for that.
Or invest in gold, right? Lock it up at home. Gentleman here had a question here. You have a question? And the lady right behind, can someone get a mic to her, please?
Hi, Alok Jetli, YOLO Cards. Thanks very much, Nandan. Very exciting presentation, great data, lots of information, lot to ponder over. My question really is, what is preventing banks from doing e-KYC using Aadhar? How do you move from paper-based self-attested Aadhar or passport documentation and associated storage and retrieval that you do today, including dormant accounts, so you have to do KYC yet again? Is there a regulatory reason why it's not happening, or is it just pure laziness and resistance to change?
No, see, technology adoption always takes time, right? There is no regulatory reason for a bank not to use e-KYC today. The RBI has permitted e-KYC. Because the Jandan Yojana and all is part of the Supreme Court, there is no court issue. And already many banks are doing e-KYC. So it's really adoption. It's nothing to do with technology. It's all there. And I think today about 40,000 accounts a day are being opened in banks with e-KYC. But all the new banks will start with e-KYC because they know that why should they go to paper-based. So IDFC Bank is all e-KYC. Access is doing a lot of work. So I mean, people are doing, but these things take time. I mean, it takes years for adoption of, especially in large organizations and all that, adoption of new technology. which is why you need an innovation startup situation, because they'll do it faster.
Just as a supplementary to that, how do you see the entire transaction happening? Assuming that I actually want to open up my own bank account from home, and I have a a smartphone or whatever. Could you just broadly, just at a high level, describe the transaction flow? How does it?
Yeah. So let's say that I'm sitting at home and I'm watching something and I want to open a bank account. Why I'll want to do that, I don't know. But let's say that I want. So I'll bring up the app. I'll enter my Aadhar number. I'll say I want to open a bank account and all that stuff. And then I'll just look at it and click. That's all. Account opened.
And the app would be owned by anybody, could be the bank or whatever. It doesn't bother you. So it just needs an interface.
No, obviously, I mean, that there'll be a secure ecosystem for all that, but yeah, it could be any app. Or it could be, or as I said, the Flipkart delivery boy can open a bank account for you.
But there's no reason for the Flipkart for physical presence to be there, from what you just described.
Yeah, but we think that self-service will take more time.
Sure.
So we think that the logical thing is to go to assisted service where somebody comes to your house or you go somewhere to open a bank account. And ultimately, self-service.
Got it. Yeah. Thanks.
Lady there.
Somewhere.
May I?
Yes,
Yeah,
please.
Yeah, I'm Latika and I'm from IMRB. I had a question, this technology seems to be facilitating retail credit. But retail credit seems to be getting facilitated. But how about retail savings and retail investments?
I showed you that SEBI example.
Right.
So SEBI, actually, I'm working with SEBI. They have asked us, meaning there's a group called iSpirit, which is a volunteer group of which I'm a member, and Mr. Sharad Sharma who was here is the co-founder of that. He just left. So we're working with SEBI to bring in the same efficiency into market transactions. So.
And another question was that retail credit, great, but how about the SME credit? Because
Totally. Because what's going to happen for SMEs is, SMEs are also going to get digitized rapidly. One reason for digitization of SMEs is that more and more vendors will sell through e-commerce sites, right? So e-commerce will go from, say, 6 billion to 60 billion in the next 4-5 years. So if for example, if I'm a supplier to Flipkart or Snapdeal or Amazon or all that, by definition, my transactions with him are digital transactions because it's all electronic, right? So suppose I'm a vendor on Flipkart and the consumer buys from me, then that transaction is digitally recorded between the system of the vendor and Flipkart. So now we have transaction flows, or if you're in a marketplace, many people are building B2B marketplaces. So suddenly you're increasing the digitization of buying and selling transactions of small vendors. So now you have a digital exhaust trail of their business performance. The second thing that will happen is when you file the GST is going to be all electronic. So that you will now have a digital trail of all your transactions, of your tax payments. The third thing is that you can ask your bank to give them the digital trail of all your receipts and payments. So if I'm a small company, I can go to a marketplace and say, I want to borrow money. Here is my tax receipt history. Here is my banking history. Here is my vendor purchase history. Now I'm a good, worthy person to lend to, and I get a loan.
There's a lady there who had a question. That will be the last question. I'm sorry. The rest of you, if Nandan is going to stay around for the coffee break, can catch him over coffee, or better still, read his book.
No, my book doesn't have.
It was released yesterday. Doesn't have stuff related to this. But
no, it has some, but not this detail. Yeah. So that's a book about everything. It's about healthcare, education.
It's called Rebooting India. So much like a presentation on the payment ecosystem, I think that looks at everything else. But ma'am, your question.
Yeah, good morning. My name is Ruchita Agarwal. I'm with Citibank. My question, Nandan, is related to the two questions that were asked earlier about cryptocurrency and the security of data, that's sitting in servers. So my question is twofold, that do you see the applicability of the distributed ledger technology to be the solution for that security concern on eKYC documents or even the database that Aadhar has? And my second question is that do you see its applicability for payment settlement outside of the clearing systems and hosting of that information?
Yeah, no, I think there's certainly a role for cryptocurrencies, Bitcoin, blockchain technologies. But frankly, there's a lot more we can do today without that stuff. I mean that's not. I mean, if I had to see everything about technology is when is the right time to implement it. So I would keep a close eye on that. There are actually non-financial applications that may come faster because, for example, agreements or land records could be a better place for a distributed ledger than money, because we can do a lot of things with the existing thing without bringing in cryptocurrencies. And I think the security problem, at least the way we're doing it now, it's everything is encrypted at source in memory. So when you create a financial transaction in this architecture, it's encrypted with 2048-bit encryption at memory. So it's already written to the system and in the system as an encrypted packet. So it's a pretty sophisticated system which is good enough for now. And I think we have to find a sufficiently compelling case for blockchain and bitcoins and cryptocurrencies before we roll it out. I'm not able to sort of visualize exactly what is that reason that tomorrow morning I should be using cryptocurrency.
Thank you, Nandan. That was, as always, very good.